Welcome back to Hitting the Mid, the place for retail traders by a retail trader. I'm your host, Jeff, and I'm here to break down market moves, share lessons from my own trading journey, and help you navigate the ups and downs of life in the markets. Whether you're just getting started or have been trading for years, this show is here to help you stay sharp, stay disciplined, and most importantly, stay in the game. Today is Friday, June 20th, and I'm back for this week, so let's get into it. The S&P down a little bit over $1, about 0.2%. Showing a little bit of weakness here since the start of the week. QQQ down $2, which is about 0.4% on the day. And the Russell 2000 down about 64 cents. Kind of mostly trading in a range here this week, down about 0.3% today. This VIX print here, I'm not sure why it's showing down $1.80. It's not down that much today, but looking at the VIX futures, they do seem to be up a little bit on the day, about 17 cents, so about 0.8%. Bitcoin, it's at 104,000, just a little bit over it, up about $100 on the day. You can see, though, it has been kind of weak. Since the start of this week, it was trading as high as about 108,000, so it's about a little over 4,000 down from there. Bonds only down 3 ticks on /ZB, and then ZN, the 10-year Treasury note futures, it's up 4 ticks. But really, both of those have kind of been trading within a little bit of just a smaller range here this week. I'm not showing too much price action. Going through a couple of currencies. Here's the pound. It did show a little bit of weakness here on the 17th, which is Tuesday. I'm kind of recovering a little bit today, but down overall this week. And the euro, more or less, down on the week, but showing pretty strong, about 0.4% today, but really showed a pretty big range this week and kind of bouncing around here. Going through a little bit more here, the rest of the market. Gold down $22 to $33.85. This one had a big reversal since the start of the week. Here on Monday, got as high as about $34.76. Currently down 33 to $33.85, so about $90 since the beginning of the week. Silver, a little bit of the opposite. It showed a little, a lot of strength here on Tuesday, getting up to closing at about $37.15, but today down about 2.7%, down just a little bit over $1. Crude oil here, pretty much unchanged on the day. After the headlines from last week, I did catch a little bit of a bid, got as high as almost $76. Currently trading at about $73.50, and off its highs from earlier today. And finally, just natural gas here, down about 9 cents, which is a pretty big move just based on the price here. So it's about a little bit over 2%. Now just a little bit of a trade recap. I'm going to go to SBUX here, taking a look at that trade from a couple of weeks ago. And I'll actually put that drawing I had on there from a couple of weeks, but I did close it for a $90 profit last week, net of fees. I closed that on June 11th. Now on that day, you can see it kind of pushed into that congestion zone towards the gap here at that red line. But I closed it prior to getting into that zone, since that was I was targeting about $90 a profit. And that is kind of the key level on that lower end of the congestion zone that I was kind of watching out for. I could have made a few more bucks if I just waited, seeing that it did push into there. But since I was at my target, and the amount I had to lose had increased to about $275, and really I only had about $225 left to gain on the position by expiration. I decided that expected value was negative, so no longer really worth chasing. And I did continue to watch the ticker this week after it broke this trend line right here. I decided after it broke that trend line, I decided to look on the short side. So on Friday last week, yeah, it did close below Thursday's low. And then on Monday, it also closed below it. And it really couldn't get back above Friday's high, and broke below this trend line, like I mentioned. So I went short using a long put vertical spread, and I closed it on Tuesday after making a quick $60 net of fees here. So this is that first trade. I bought that call vertical, so this was that bullish trade, and closed it for 90 bucks. There's about $3 worth of fees in here. And then here's that short trade. So I bought a put vertical, which is a bearish type trade, and then I sold it back the next day for a little bit of a profit. I just didn't see too much there that I wanted to hold on to after catching a quick move here the next day. Now for today's trade, I'm going to go to First Solar. It's ticker FSLR. Now looking at the chart, FSLR gapped down on Tuesday, and it closed about 18% after Monday's sell-off. That sell-off also bumped up implied volatility and IV rank, and that IV rank is now greater than 50, so it's almost 55. Now, because of the sharp sell-off, I'm going to be contrarian with a little bit of a bullish trade. You can kind of see it's showing a little bit of an uptrend. We'll see where it really goes. But what I'm going to do, I wanted to be a little bit more aggressive and sell this 140 put, but because the spread's a little bit lower here on the 135 put, it was bouncing between 20. It's a little bit higher now since when I looked earlier today. It's about 25 cents a spread. But since it's less of a spread compared to the 140 put, I'm going to go with this 135 put and selling that one. Just taking a look at the bid-ask prices, that's my way of gauging liquidity, and there is a little bit of a cost actually to close the trade if those bid-ask spreads are wide. So I'm going with that 135 put here. I'm going to keep it defined risk, and I'm going to also buy the 130 put at the same time. And the reason I want to keep it defined risk, I just want to kind of protect against any additional headlines that might cause another sharp sell-off. So the max loss here is about $350 or so, depending on where I get filled. Now I'm in the monthly expiration, the July 18th expiration at 28 days to expiration. So I'll definitely close this by next Friday, which would be 21 DTE. I don't expect this IVR to go down to less than 15 by then, which would have been another criteria for closing, but it really won't get there. If I do get 50% of potential profit within the next week, which would be about, let's say, $80 or so, or if we approach that June 16th gap at $169 right here, I'll look to close the trade too. So I'm going to go ahead and put that in here. I'm going to put it in at 165. I'm going to do a little bit of price discovery here to see where we get. So I send that order in. It doesn't look like I got filled, so I'm going to walk this down. And right now what I'm doing, I'm just kind of seeing where the market is going to take this order. It looks like there was a little bit of a price change here in the spread. Really shouldn't affect too much where I get filled at, but I went ahead and I'm going to continue replacing this one. I'll go down to 160 to see if I get filled there. And there we go. So I'm filled. And that's it for this week. Thanks for tuning in to Hitting the Bid. If you enjoyed today's video, don't forget to subscribe, leave a review, and share it with a fellow trader. You can also sign up for my weekly newsletter at news.hittingthebid.com, where I share market insights, interesting tickers, and practical strategies to help you grow as a retail trader. Until next time, trade small, trade smart, and keep hitting the bid.